increase will be spent on the health service. Now, of course, a lot of people are very pleased with extra money pledged to the health service. What we need to see is that actually happen.
He's a cunning so-and-so, isn't he? I mean, do you think that the leak about, oh, we're going to be paying more on VAT, do you think that really came from his office?
I don't know is the answer to that question. The one thing I do know is that it's been quite a good budget, really, with extra money pledged to the health service, no increase on alcohol, no increase on cigarettes, 6p a packet, which obviously, as the Chancellor said, for health reasons, he's putting that increase on there, always a good excuse. Generally speaking, a good budget and very, very positive for the health service, as he said. He's pledging an extra 43% increase in spending on the health service over the next 5 years.
That's a very wise, very popular, going to be a very popular choice, Paul. But is he going to pay for it purely by a 1% interest in national insurance?
We're all going to pay for it from our salaries. A salary of $25,000 would mean an extra £5 a week in taxation via the national insurance contribution.
Yeah.
But when we offset this against the very generous children's tax credit that the Chancellor has introduced, average families with children will be about £3 a week better off.
Right.
So it's taking from one hand and giving from another, as always.
What about the pensioners?
Well, good news for pensioners. Single pension going up by just over £3 a week, married couples by almost £5. But the good news there is that the age allowance has been increased so that they can actually have a higher income coming into the home, approximately £12.50 per week, without paying any further taxation at all.
Okay.
There's a couple of other
go on, carry on.
A couple of other small little points there. Yeah, the Chancellor has announced also that for very small breweries, there's a reduction in revenue of 14p a pint. So that's good news for the small local pubs.
Yeah.
And I think that would be greatly received.
Yeah. Okay.
Yeah.
What about petrol?
Well, there's a freeze on petrol. That was expected, really, because of the high cost of fuel at the moment. And obviously, the farmers will be pleased about that, and the lorry drivers. And good news for all of us, because the last thing we want with fuel prices as high as they are currently is only to be taxed further. So there's a freeze on petrol prices, which is good news all round.
So all in all, Paul, a very sort of potentially popular budget with no sort of sting in the tail, such as a vast rise in taxation.
I think it will be a popular budget. The main reason for that, obviously, is the extra money that he's pledged to go into the health service.
Yeah.
He's having that independently assessed to make sure that that does happen. He's very aware that a lot of money's been wasted in the past, and let's hope that he sticks to his guns and this extra money is used in a positive way. As the Chancellor says, we have the opportunity now to make the health service first class, and we really need to use that money and put that right.
Okay, last very quick question.
Well, let's hope so.
What about road tax? Is that going up or is it staying the same?
No change on road tax
Fine.
either. There's a freeze there. There's another interesting little point that mopeds, etc., have a reduction in road tax of about £35 because they're looked on as more environmentally friendly.
Then I shall trade my car in the morning.
You know you won't.
Thanks very much indeed,
No,
Paul.
you won't.
Good to see you. Thanks for doing that for us. That was very
Thank
good.
you, Paul.
And if you want to know how the budget affects you in more detail, because we can't cover everything in 3.5 minutes, then click onto our website. That's www.channel4.com/Richard and Judy, and that's the first time I've got that right. There's an interactive questionnaire there that will tell you how much it will cost you in your own circumstances. You basically just keep clicking a button when it asks you questions, and it'll tell you what you're going to have to pay.
I think a lot of people will be very relieved about the health service.
I have to say, and you know, this is an apolitical programme. I do think that a targeted and budgeted increase in funds to the NHS, which comes directly from a tax measure, is a fabulous idea. I mean, if you approach people in the street with a questionnaire and said, would you be prepared to pay more tax if it went to the National Health Service? We know that 80% of people would say yes. So at last, it looks like, you know, the public will's been met on that. That's good. Now, when the Queen agreed to pay income tax a few years back, she struck a little deal. In return for filling out her tax forms every year, just like us, whatever she inherited one day from her mother would be totally exempt from what used to be called death duties. We now, of course, know it as inheritance tax. So, the 50 million squid left to her by the Queen Mum will not be slashed by a whopping 40%. That's 20 million to the taxman. Won't be going, and a lot of you are pretty angry about it.
But if the Queen doesn't have to pay it, why should we? 40% of everything we leave to our kids above the value of £250,000 will go to the taxman. That means with house prices the way they are... Do it.
All right.
I think that was like shit.
Carried on. That means that with house prices the way they are now, kids may have to sell the family home just to pay the tax. You're alive, good. Well, in the Queen's Corner is George Osborne, Conservative MP for Tatton, and to tell the humble rest of us about just how much our children stand to lose is financial advisor Paul Banfield. That's all right. Now, George, we've had loads and loads and loads of calls already from people who are... Some people are in the Queen's Corner, but most are furious. They think it's not fair. What do you think? And why? Well, I know what you think. You're in her corner. Why?
Well, she does pay a lot of tax. She pays income tax,
Yes, so does
capital
everybody.
gains tax, council tax, probably at the highest band.
Yeah,
Everybody
but we
pays
all
income
do
tax.
that.
We all pay that.
Well, the only thing she doesn't pay is inheritance tax on property or pictures or jewellery, which she inherits from her mother, who is the consort of a sovereign. It's this sovereign-to-sovereign deal.
Yeah, but tell me
And
why that's fair.
would we want all this jewellery and these pictures, for example, being flogged off, maybe some of them going abroad,
Are you saying
so
she
that the Queen could pay her tax bill?
Are you saying she hasn't got the readies to, to pay
no,
them?
because this is property. The property she's inheriting from her Queen Mother are pictures, jewellery. We've read about it in the papers, and most of this is going to be on display to the public.
That's what aristocrats have had to do, haven't they? Really,
Yeah,
basically.
but do we
everybody
want?
else.
Well, yeah, and most of them, as you say, have been driven out of their homes, and it's all in the National Trust. Now, if we're going to have a queen, if we're going to have a head of state who's a monarch, then surely they should have a bit of financial independence. Or else, frankly, what would happen is they'd rely on the, yearly handouts of politicians like me or Stephen Byers or Tony Blair.
Yeah.
Is that what the public wants?
Well,
is
let's
that
find
what they
out.
want?
Let's talk to Sandra from Dorset. We'll come to you in a second, mate. Let's talk to Sandra, who's calling us. You're a royalist, aren't you, Sandra?
Yes, I am.
But you-
I do believe in the monarchy,
Yep.
but on the other hand, if my family have to pay inheritance tax, they're going to have to sell quite a lot of things to be able to pay it. Surely the Queen could sell 2 or 3 paintings. She won't even miss them because I doubt if she even sees them. And to say that she pays council tax, is that on band F, for goodness sake? I think it's outrageous.
Well, she probably pays it on band H, actually, if you look at Buckingham Palace.
good.
But
Yeah.
Oh,
But
so,
actually, in a way, he's actually on your side too, because you actually think that none of us should pay inheritance tax.
Well, yeah, actually, in an ideal world, I'd like none of us to pay inheritance tax. I'll tell you why, because we've already paid tax on this. When you earn money, you pay income tax,
Yep.
or you pay
Right.
capital gains tax.
Yep.
And at the end of your life, you get clobbered again for dying, in
Well,
effect. You get taxed on
I
dying.
think the way most people sort of feel it is really sort of, what's the point? I wanted to leave my kids this week. We come to how you sort of deal with all that, Paul, in just a minute. But let's take Hayley, who's precisely in that situation right now. Hayley from Wiltshire. Hello, Hayley.
Hi, Judy.
What's your story?
My father died last May, quite suddenly.
Yeah.
Followed by my mother this February, which was actually expected. And there's 4 of us children. They've worked very hard all their life, paid their taxes, and we've just had a bill from the taxman last week for £42,000.
So you must have been left in considerably more, an estate worth more than £250,000,
Yeah,
because that's the limit now.
They worked so hard all their lives, my mum and dad, and they saved wisely, they spent wisely, and, they wanted us to have that money. And he's already paid his tax on it, my dad, at 40% because he was earning well.
Yeah.
I just think it's really unfair. One rule for one rule for another.
Well, this Tory MP agrees with you. Paul, can you explain to us... I mean, I don't suppose there's any morality in tax at all, other than we all need to chip in some way. But what is the thinking behind death duties, inheritance tax?
More money for the Treasury, I suppose.
Is it simple as that?
Inheritance tax is a cruel tax. It raises about 2.2 billion, which in the overall scheme of things really is quite small. The government really needs to look at reviewing its policy, I believe, on inheritance tax. And going to the point earlier, I do believe that the Queen should pay inheritance tax. I don't really agree with the argument that she'd need to sell a painting or 2 to pay the bill.
You don't think she would?
She wouldn't need to. She can pay that from her own funds, of course. It doesn't have to come from the estate that's been left.
Yeah.
So she has the capacity to pay that
Well,
bill.
let's talk about
Even
ordinary...
though, sorry, but one estimate of what, I don't know if this is correct, but one estimate of what she would pay on the Queen Mother's estate is something like £20 million?
That's correct. That's the figure that's been estimated.
Yeah.
Now, obviously, the fund or the estate that's been left will be in the region of 50 to 70 million. So I suppose that's a problem that quite a lot of people would like to have, really.
Well, absolutely. Let's talk about what it actually means, to less what's the word? Exalted mortals. Let's take an example here. We've got a family home which when the people who own it die, was worth £250,000. They've got £50,000 scattered about in bank accounts and building societies, so that's £300,000. That takes them £50,000 above the threshold when you have to start paying it. That means that their children are going to have to pay £20,000 on that.
And we see all the time families that are left behind that need to sell the family home, the children, in order to pay this inheritance tax bill.
So the middle classes then,
ludicrous.
the home-owning middle classes are taking on, are picking up where the aristocrats left off. We saw the destruction of the aristocracy, and some people would say that isn't a bad thing, in the 50s and 60s with massive death duties. And now that property prices are rising so high and so fast, children who inherit a home find themselves having to sell it in order to pay the
problem
tax.
we have is that inheritance tax was once known as a wealthy tax. In fact, that's not the situation anymore.
Because it hasn't taken into account the rising cost of
property prices.
A £250,000 house, or it's a nice house, but an awful lot of people now have houses like that in the southeast, in my constituency in Cheshire, and that's not unusual to have a house of that value. These people aren't super rich. They're not like the Queen. They're not multi-millionaires.
They
and
just
yet they're
bought a
being
house at
clobbered.
a price they can afford, a modest price that they can afford according to their income, and they've seen the value of it rise over the years by how much? 52%?
It's amazing. And because that's happened over a period of years, people haven't actually woken up and thought, I need to review my inheritance tax position. So there's an awful lot of people that don't realise the problem.
So in other words, if there's a couple in, say, their mid to late 40s with a son of 17 and a daughter of 19 still living at home, and they're killed in a head-on car crash together, that is, the parents are, and their house is worth, say, £500,000 and they've got £100,000 in savings, their kids are going to be dispossessed from the house because they'll have to sell it to pay their parents' death duties.
If there's no assets or ready cash to use...
Or take a mortgage out on the property.
This is the problem, and people really need to plan ahead to make sure that they can use good tax planning in order to reduce any possible
We'll talk about
tax.
your tips for that in a second.
We've got one more example, haven't we?
This is a family home. Well, you take us through it. The value of the home is $750,000.
Yeah, the value of the home is $750,000, and the value of the total estate is $800,000, and the inheritance tax that would be owed on the death of these people would be £220,000.
Which there's no way, really, unless they were immensely rich themselves, but if that was their main inheritance, they'd have to sell the house, wouldn't they, to sell the tax.
And you've got to remember that they've already paid tax when they bought the home, the income tax and the stamp duty. So this is the third time they're paying tax on the same amount of money.
Well, look, Paul, while you're here, just tell us what... I mean, certain things are illegal, obviously, and in fact, as you pointed out to us, the Inland Revenue is increasingly cottoning on to some of what seems to a lot of us a very sensible way of avoiding that.
So some bullet points very quickly then on what people can do legally.
What people can do is that they can give $3,000 per year to anyone they like to reduce their inheritance tax bill. So normally you would give that to a son and daughter.
Right.
Is that $3,000 per child, or
that's $3,000 that you can gift as an individual.
In total,
so that's the total. People should also look at trusts as a way of putting aside monies for their son and daughter. You can gift outright monies to your son and daughter, but if you die within 7 years, there will be an inheritance tax liability.
So if you're told you've got a year to live and you take out one of these trusts, it ain't going to do you no good. Too late.
Exactly.
Too late.
It won't have any effect in the first 3 years whatsoever.
But if you think you can give your house to your child and then sort of still live in it and maybe pay rent, the Inland Revenue is not going to be happy about that.
Well, people used to do that. That's now been stopped because, of course, that is a gift with reservation, being that you've gifted it, but you're using the property.
Yeah.
So that's not really a gift. It needs to be an outright gift, and you're not living there.
Well, boo to the Treasury is what I say.
Everyone says boo to the Treasury, don't they?
Thank you both very much indeed. Thank you for all the calls on that. And that's it for tonight. Tomorrow, Friday, yippee, the freed golf ball one and his wife join us live for an exclusive interview right here. He still cannot believe that he went to jail for scavenging lost golf balls and selling them.
Also coming in, the cast of Our Feed a Sane Pet on their glorious TV resurrection. So thanks for watching tonight. Sorry about the cough. We'll see you tomorrow. Bye-bye.
Bye. See you.
Bye. Bye.
Mortgage lender says house prices are continuing to soar. The Halifax says house prices are now rising by just over 15% a year. This means house buyers are borrowing more than ever before. You used to be able to get 3 times your pay packet. Now it's up to 5 times your salary.
First-time buyers in Surrey getting some last-minute guidance from their financial advisor. They're buying a home with a mortgage worth more than 4 times their combined income. They're confident they'll meet the repayments, even if interest rates rise.
I think the risk is outweighed by the fact we've got very low other outgoings. Couple that with the fact that house prices have been going up over the last few years by a good 10% per year, and I do think this will continue.
Some lenders are offering mortgages worth 5 times the buyer's income. With interest rates still at a 38-year low, house hunters have been snapping up the deals.
The key thing clearly is that they can actually afford the payments. Now, if you're going to take a mortgage on a variable rate, you must budget for the fact that interest rates are likely to go up. How much they're likely to go up is a matter of judgment, but I would suggest budgeting for a 2% increase would be sensible. If you can afford the mortgage payments on that basis, then you're fine.
No one expects the Bank of England to raise its base rate too far too quickly, but one independent economist thinks gradually rising rates, coupled with rising unemployment, would mean trouble for buyers borrowing up to 5 times their salary.
I think when you get up to multiples as high as 5, both the borrower and the lender are exposing themselves to a high level of risk. The sort of statement you hear increasingly now about the housing market is, you don't understand, it's different this time. Now, the other recent context in which we've heard that sort of statement is, of course, with regard to the dot-com boom.
Despite the uncertainty, few would-be buyers seem prepared to close the door on the opportunity to make money from property, at least while the chance is there. Howell Jones, BBC News.
Grim headlines for potential homeowners this morning. The dawn of the 50-year mortgage in this country has broken. Buy a house in your 30s and you'll still be paying for it in your 80s. Seems the only way for some first-time buyers to get their foot on the first rung of the ladder, as house prices just keep shooting up. Financial advisor Paul Banfield, who's been on the show before, thinks that we're on a verge, really, of seeing a completely new approach to house buying in Britain. The headline's accurate. We are looking at 50-year mortgages now.
We are looking at heading towards 50-year mortgages. Obviously, the first stage would be for people to extend it to 30 years, then to 35. And as you mentioned earlier, there are some countries around the world where they're already on 100 years for a mortgage.
Japan? Well, so how that's already started to happen in Japan. But how on earth does that work? I mean, it sounds like science fiction. Nobody lives that long. So how are they going to ever pay their mortgage off?
Well, that started in Japan in the 80s. And the problem with that, of course, is that people are not now handing on inheritance so much in Japan, but actual debt.
So they pass the mortgage on to their child?
Correct, because it's going past the generation to the next. And really, we can all hear the clock ticking over here. It's a time bomb.
Well, I was thinking, even if it's a 50-year mortgage and you're looking at, say you take it out when you're 35 or 30, 35, that means you're paying it to 80, 85. You'll have long stopped earning. It will be. It will be a matter for your children then to take it on, won't it?
And that's something people will need to consider. Yeah. Obviously, what we do hope is it doesn't reach 50 years. And we are seeing already people looking at 30-year mortgages. First-time buyers are in a trap, really. Property prices escalating. I mean, the good news is that mortgages are relatively cheap right now. But the problem is, of course, with interest rates likely to rise, people taking on longer-term mortgages really do have some problems.
Well, you prepared a graphic for us, didn't you? You actually said that comparing a 25-year mortgage, which is the usual kind of mortgage now, there you are, you're paying higher monthly repayments, 580 as opposed to 450 for a 50-year loan mortgage, 50-year loan. But yeah, look at what you pay in total.
Exactly, it's very worrying.
Nearly £100,000 more.
What we're hoping is that first-time buyers don't necessarily turn to these longer-term mortgages because, as you can see, longer-term, it doesn't pay off. They're paying £100,000 more in interest, which is frightening, isn't it?
So given that we know that more and more young people are joining this pile of young couples at the foot of the ladder who can't reach up and reach the first rung, are we going to look at the Japanese model, and it's not just Japan, where whole families buy houses, parents increasingly put the down payment down, help with the repayments? Is it going to be a family business now?
I think it's certainly a way of buying a first property to share with a friend. The problem there is, of course, you need to make sure you get on with them, because otherwise you're entering into a commitment where that could go wrong. And there are other things you can do. There's certain schemes available for first-time buyers to join where they're called share ownership schemes, where they buy half the property and half is owned by a housing association where they rent it out. And the people living there then retain the right to buy further share in the home later on.
So you pay 50% of the purchase price, and on top of that you pay a reasonably low rent to the housing association.
That's correct.
In return for having sole rights to rent.
Absolutely.
Yeah. And the rights to buy further shares, as you say.
In the future. That's one way to help first-time buyers. With property prices going up on average 3.6% per month. When we look at an average home, let's say at 100,000, that's £3,600 that's increasing per month. That's quite frightening, really, isn't it?
But are we actually reaching the sort of saturation point where we say that, you know, we pride ourselves on being a nation of homeowners? It's what everybody aspires to. But as most Europeans don't bother buying, they rent, and indeed most Americans as well, in towns. Are we getting to that point now ourselves?
Well, we are. We're an island. That's a problem in itself, because of course there's not the room to build more housing. Any spare land is either Greenbelt or National Trust. I'm not saying that's a bad thing, but of course with the housing market there's a shortage of new homes that are affordable to first-time buyers. We have the fact, as you mentioned, Judy, that we love buying houses. We buy houses, you know, till they're coming out our ears, and that's a problem because of course we've got the people buying houses for investment, and that's escalating the prices of houses for first-time buyers.
I was talking to somebody today who said that their father sold a one-bedroomed bungalow in Dagenham, in the East End of London, which is, you know, has fairly low-priced housing. So he didn't get a tremendous amount for it. And with the money, he bought a 5-bedroomed house in France, in central France, with several outbuildings and a stream and a water wheel and all the rest of it, and had change in his pocket. Why are the price differences between Britain and France, for example, you know, we're separated by 20 miles of sea, so massively different?
It is space again. It comes down to space.
Big country.
There's so much more space there. And of course we do have the culture, as you mentioned, that we like to keep buying, which is escalating prices. So really first-time buyers need to take a good look at.
OK, so to sum up, basically, don't take on too much rent till you can afford it, but also presumably there's a message in here for parents somehow. I mean, this kind of being able to provide a kid for the deposit for their first house is going to be more necessary than ever.
That's vital now. There are things first-time buyers can do. They can look at other areas where property's cheaper. So if they're in a very expensive area, we'd recommend that they look at other areas rather than go to the 50-year mortgage. We do foresee that longer-term mortgages are happening.
So depressing to have a 50-year mortgage slung around your neck.
Especially young men in particular hate the idea of a mortgage, and there's the millstone around the neck and all the rest of it.
Young women like it either.
And a 50-year one. Very quickly, if, as is some people are predicting, there is a sudden collapse in this boom, this housing boom, and prices drop, and it happened in the 80s big time, presumably problem solved overnight.
The problem solved for people buying, but the problem now is not only the first-time buyers, the people on the next rung of the ladder are having problems finding property because that's escalated.
Right, I get it.
So it is a problem.
OK. Thank you.
OK, thank you. Well, that's all a bit sad, isn't it? But we've got some money coming after the break. It's You Say We Pay. Maybe enough for the deposit, I don't know.